What's up? What is up? Big Cheds. Coming to you live. It's Saturday, September 11th, 2021. I want to say thank you. I want to say welcome. It's definitely an absolute honor. It's a pleasure. It's fun to do these things. This is, let's say, number two. This is number two in a series I'm calling educational live streams. And what I'm aiming to do is I want to kind of walk you through my setup. I want to explain to you kind of how I'm looking at a chart, explain some of the basics, give you some tools. And when I do these, I'm going to kind of recap the whole crypto market, kind of where I think we're going, where I think we've been. But these are very infrequent. I'll do these kind of once every couple months because I really save my premium, my long form analysis for Bitcoin Live, where I am a founding analyst. That's something I'm really quite proud of. So if you're interested in that, if you like these types of kind of long form updates, I definitely encourage you to go check that out. I'm also going to talk directly to you. I'm gonna look at the chat room, see if I can answer some of your questions. See if, chart requests. I'm happy to do those. If you don't know who I am, I'm kind of known as like a chart guy, a chart nerd. I don't really pay too much attention to like a project. That means nothing to me. It's all price action. And I look at technical analysis as a historical study of price action with the goal, with the purpose, with the aim of identifying the trend. So you can play the trend, right? Because you want to play with the trend rather than, fighting it. And, it gives you the ability to identify pivot points or specific points in the chart that would show that is weakened or strengthened that trend. So that's what I do. I'm a chart nerd. I also think a lot about psychology, trading psychology, risk management. I'm known as a newbie helper. And, you may know me. I published a book called Trading Wisdom, 50 Lessons Every Trader Should Know. I'm really proud of that book. I've been doing a free series on, first of all, the book is available on Amazon right now. There's a Kindle and paperback format. It's really popular. People have enjoyed it. And I love it. I'm just hanging out. I'm doing my thing, and I'll get these updates. And someone's at the beach, and they're reading my book, or someone's traveling, and they're reading my book. And, what a feeling that is. So thank you for that. But some people can't get the book. So I've been doing a free series on my YouTube channel, which is Cheds Trading. Definitely please check that out. YouTube Cheds Trading. You're here now. Hit that like, hit that subscribe button, please. I've been doing a free version of the book, right? The 50 lessons every trader should know. I've been doing 1, 2, 3, 4. I've done 5 so far. I believe I'm going to do lesson 6. Lesson 6 on Monday, which is experience comes first. For those of you who already have the book, it's page 21. I also published another book before this. Just if anyone knows, back in late 2017, I was diagnosed with lymphoma. I battled my cancer. I won. And then my mother had cancer, and I took care of her. So I wrote about that whole experience. I'm not trying to sell this book. If you know someone who has cancer or someone who if you think this might help them, reach out to me somehow. Find me on Twitter and give me your email address. I'll just send you the book for free. I'd love to do that. I'm on Twitter here at Big Cheds. It's kind of where most of you know me. So that's kind of also I just started a new show, a new weekly show on Banter, which the great folks at Banter. Right here is my first episode, Trading Wisdoms, right? With Big Cheds. Look at that cool intro. So that's Thursdays at 5 p.m. Eastern. So check all that stuff out. Definitely subscribe to Banter too. They have a lot of great stuff. So what are we going to do? I have some stuff here ready. Let's talk about what's going on. And I'm going to ignore the chat room just for a little bit. I'll get back to that. Get to your questions and all that. And again, thank you for watching. So how did we get here? Now, last time I did the live stream, I talked all about the consolidation back here. I think I might even have talked about kind of the MA200 action and the price acceleration breaking above 20K. What I want to talk about is how we kind of knew the top was coming back here in March, April, May. And then I'm going to talk about how we kind of knew the top was coming right here. I put out a lot of work on Twitter about that. All the things that I saw, I shared them on Bitcoin Live. And so there were some signs. We'll get to that. So what do we know back here? So the price continued to rise. It was just a gorgeous movement. You can kind of step back your time frames. You know what? Before I do that, I did promise to explain my setup. So let me do that. It may look kind of complicated for you. If you're new or whatnot, what I would say is you have to find a style that works for you. There is, in my opinion, really no one way to do it. This is a setup that I've I've evolved after many years of trading, lots of experimentation. Experimentation's okay. I really just have the price and the moving averages, the volume, and then I just have these two indicators, and I'll explain them there in a moment. Most of the time, though, I don't really even check the indicators. I'm going with the price, and for me, everything is baked into the chart. So let's start with the lowest to the biggest. Lowest to biggest. So the green line is an exponential moving average. There's two main types of moving averages. And apologies if you know this, but I'm just going to kind of assume you don't. A simple moving average, SMA, or just MA, or an exponential moving average. And an exponential moving average gives more price weighting to the most recent candle. So in this case, I have the 8 EMA, right? And a great example of this, I use it under a lot of time frames because it really gives you, when the price is accelerating, it's in that most bullish phase, it will kind of, it will get overextended as it did here above the Bollinger Bands, and it comes back and it touches that green line a lot. And you see Bitcoin really did that. So this is all through early and beginning of 2021, kept bouncing off of it. And then here we went a little deeper. So that was a little bit of a warning sign in the weekly chart. And then the April 19th week here, we had our first close below. So when you're looking at moving averages, you want to observe price and moving average interaction. A lot of the time, the price will just chop right through it. So you want to not pay attention to that. But on this chart, you can observe, which is what you do as a chart technician. We can observe the price interacting with that moving average. It's also the case here on that moving average 50. All right, so let's talk about this 50. It's a simple moving average. We talked about exponential moving averages. This is a simple moving average. What does that mean? It just means, so it's a 50, okay? Right here, MA 50. All 50 of those periods have the exact same price weighting, right? That's a simple moving average. So we have the exponential, we have the simple moving average. On this chart, you can see the price moving average interaction, and that gave you these kind of buy the dip moments, because when you're in that primary uptrend, you want to be buying the dip in the uptrend. That's your only job as a trader, is to buy dips in uptrends, ideally at key levels, moving average support. Right here was the violation that led to the lower high and the breakdown. On the weekly chart, you can see that. It broke down. It came close to that MA50, and we went sideways. This was about 87 days. We'll get to that in the daily chart. But we were initially rejected at the 8 EMA, came back, and it found support here in the orange line. And there was a key inflection point in this chart. This weekly chart never broke down. Bitcoin has been bullish. The weekly chart never broke down because we never closed below this orange line. We closed right at it, essentially bounced off of it. Dipped below it, but bounced right off of it. And if we had done that, that would have been the first close below that since around 8,000. So that would have been a major sign of trend weakening. It found support there and it bounced. So, to simplify things, that gave us, we had our high and we had our low, right? And now we have our lower high. We'll get to how that formed. But that's the 8 EMA, that's the MA50. I also use this yellow line. All right, this yellow line is also an exponential moving average. It's a 34. So some of the exchanges, like GDAX or Coinbase uses 12 and 26. So, 12 and 26, I use 8 and 34. And you can use them for a crossing signal. I'll give you a good example of that. We had some signs of trend weakening, really a bearish warning sign here. This is in this most recent, the macro top, the all-time high, 64K. We had the green line, the 8 EMA, crossing over this yellow line, okay? When you're looking at, there's a few things to keep in mind with moving average crosses. And perhaps I will just hide some things here to make it a little bit easier when I'm making this point. So you want the first thing, or not the first thing, a very important thing is you want to have a close proximity to the cross, right? If the price is crossing here, if the moving average is crossing right here, 57.2, you would want the price to be close by. Why? If it's crossing here, but the price is already, $7,000 or $10,000 lower, a lot of that move has already been baked in. And we saw that with the whole death cross, with the 50 and the 100 death cross. For most of the time, and maybe even right now, I think the price is at or higher that, death cross. So those big moving average crosses are not as powerful if there's not close proximity to price. So we had a MA cross here, the 8 crossing the 34. But everything is context. Japanese candlesticks are context. You want to have, a reversal, a bull reversal candle like a hammer at the lower Bollinger Band. And hopefully I'm not bouncing around here too much, but you want these lower shadow candles right here at the lower Bollinger, not at the upper. Upper, you're looking for a bearish signal. That's a bearish candle. That's context. Everything is context. So the context of this moving average cross is that we had several failed crosses before. We have a failed cross here we can observe, we can point to. Failed cross here, right? The green line, like bulls rallied, bulls rejected lower prices, rising demand, anxious buyers, right? Staved off or prevented that cross. And then we had another one right here. So what's the context? The context of this moving average cross is it comes after 3 failed attempts. So you can kind of see the top slowly, rolling over. And that's okay. You got to understand, a lot of people get freaked out. And that's the same with right here. Like we had 6 weeks in a row to get to this top. You got to understand, you're not just going to keep going up. There will be people who will tell you it's bullish every day because that's how they make their money. They probably believe it. But a lot of people will just tell you it's bullish because it's the easiest thing to do. I just tell you what I think, right or wrong. I mean, that's just what I do. It's fun. I look at it, I give it my heart. So that's the point, is this cross was in context of the 3 failed crosses. So that's a good way to use these moving averages. So I talked about that. You also want to have a moving average cross. You need to have a trend to reverse. So in a long period of sideways movement, moving average crosses are less powerful. And I'll give that right here. We had the 8 crossing back up above a 34. It was after 80 days of sideways. So it wasn't as good a signal, but you had other signals at that time to give you more confidence. So let's talk about now the MA50, the orange line. Let's talk about that moving average, the simple moving average, 50 period. Okay. What can we observe, right? That's our job. We read a chart. We're chart technicians. What can we observe? We can observe ever since the price accelerated, it broke up above 10, 12K. There's this air, okay? The distance between the price and the rising moving average. And you can see it never got there, didn't get there in the 27th, didn't get there, early December. Had that big move, temporarily overextended. Even had some pretty good bear volume, right? You even had some pretty good bear volume that 11th, that day, the January 11th day, which would kind of suggest a little bit of further downside to come. Big volume on red candles, especially near kind of the top of the channel, suggests there's going to be some follow through. Kind of had an equilibrium here. You can see that. You can see how you had a little bit of a breakdown. Equilibrium, when people say that, they're often talking about a high and a low. Okay, this will be after some move. High and a low. It bounces, it puts in a lower high at some point, comes back, ideally finds rising support. And if you kind of extend that, that's where you get those bull pennants, you get those triangles, symmetrical triangles, you get those tightening ranges, right? That we're seeing that here on the daily chart. The high, the low, the lower high, and somewhere in here a higher low. We'll get to that. But you saw that here. Right, you saw this kind of happening where you'd see that pretty well-defined kind of a falling resistance or falling resistance, falling supply. You have a diagonal line here. One thing to point on, many things to point on diagonal lines, and I think I actually want to make that point when I look at the lower time frame Bitcoin on kind of the texture of this current bounce, and we'll get to that. But really the most important thing is it's not about the line, it's about the trend. So even though this candle, you're looking for a best fit when you're drawing this. You want to basically have as many contact points as possible, but it's not just about the line, right? You're going to think about having a little bit of a filter around the line, right? That's your trend. Okay, so that's what you want to keep in mind. So, in any case, you had that very well defined. And again, you want to look for the most obvious signals, the most obvious price structure, and you want to and that will give you something to make a trade off of, right? Mixed signals, weak signals, just avoid it because you don't want to make a mistake. Protect your capital. Okay, you saw a little breakdown, so you kind of had the rising, had this triangle. Everybody, you go back, you probably saw everybody tweeting that out. You had the breakdown. All right, breakdown found support MA50, found support MA50. So here, you had what I would look at maybe kind of a little tower bottom type of thing. Let's see if I have that just for fun. And I wanted to throw out some of these. Yeah, like a tower bottom, something like that. Big move down, small bodies sideways, and a move back up. Either way, the price broke out of that downward structure, right? The price broke out of falling resistance, rejected, kind of back tested it, which is called a throwback. This is a good opportunity to discuss a concept called a throwback. Throwback is where, and this is on a horizontal, which I prefer to play, where the price is rising and the price will break through. And, let's say it just does some kind of a bull flag. Let's say that bull flag breaks down. When you come back, that's the resistance. Now it should be support. So you're jumping in on a retest of a broken resistance. That's a throwback. Okay, in this case, a lot of people, maybe jumped in on the diagonal break on this candle, January 29th. You see it's sold off. Maybe they got trapped a little bit, rejected, through, come back. That's your throwback, your retest. The issue is now this retest is actually lower than this level. So you can, in theory, look at that. You could keep retesting that all the way to, 0.0000, whatever, down to nothing. So that's why, ideally you're structuring your trade, based on some type of a horizontal, throwback. But in any case, not to get too far, not to get too far off topic, we saw that, the diagonal and then the pullback, the throwback, the bullish retest, and the bounce all at the MA50, right? Simple moving average, 50 period. Bounced again, made a new high, came back, MA50 area, okay? Pretty close. And people at that point and you had what's called the confluence. Confluence is when you're combining more than one factor. So in this case, you had a pretty well defined horizontal. You had that high. You had the high from the January move. So when the price came back, you have dip buyers, people who know what they're doing, who are recognizing a powerful uptrend. Price is coming back. I guess after it kind of broke this structure, that support, you're starting to look here. Boom. So this support, let me try it this way. That support lines up with MA50, confluence. So you had kind of a well-established rising demand or rising support, lining up with a key horizontal, it bounced, yada, yada, yada. Same thing here. You could argue that the height, when the price was initially consolidating here in the end of February, you can see where the price was initially let's try it again. You see where the price was initially rejected here. Rejected, breaks through. Now it's support and MA50. So lined up really nicely. So you had really like a really clean kind of stair-stepping type of uptrend. And then, wow, this day dropped all the way down. At that point, we had dropped, let's take a quick, what was that, 30% at that point? We had dropped, not even close, 21% at that point. From here to here, 21%, and a real nice buy the dip. So that's like, wow, good job, you bought the dip. It bounced, it closed right at the MA50. And that was a very key inflection point because it closed, actually, I think right in above, maybe right at or above these lows. You still kind of had the higher low on a candle close rather than the candle wick. You at least still had a pretty good argument. For bulls, next day, whoops, April 19th. We talked about this, I think, in my last video. First close below MA50. So really that's when that bull trend went from bullish to neutral. I often talk about the concept of green light turning orange before red, green light, orange, red, or a downtrend red, orange, or red or yellow, and then green. Think about a stoplight. There's that changing period when you're going down. First thing bulls need to do is force sideways. Exhaust sellers, establish demand, and also establish kind of a resistance that you can break and then make a trade on. Right, so that's kind of what you would see. So here we saw green turning to yellow. Okay, first close below, bounced back up, rejected, kind of came down. So when it did that, there were also plenty of people who were looking at this as a head and shoulders structure, either with kind of a head and shoulders, a normal one, or a complex, which would be two left shoulders. In this case, kind of, complex shoulders and head, to be precise. But let's just keep it simple because it's what maybe works best. We have the up thrust. We have the next one. Now we have there's three up thrusts, which is also the term for what happened here with this bear trap, is also called specifically an up thrust. Okay, opposite of that would be a spring. So we have the price established the resistance. The resistance was established with this tweezer top. What's a tweezer? That's a tweezer top. The shadow, the bodies don't have to look the same like this, but you want to have pretty close upper shadows. They were pretty close. That qualifies as a tweezer top. Rejected, came back, MA50, bounced, and it broke that high, right? It broke that high, but then it came back a few days later. So when you have, I don't know if I mentioned it yet, when you have a resistance level pretty well established, at least in this case, and you break up above it, when you come back, if it doesn't hold, right, you don't do the throwback. You pay attention if it doesn't hold. So that's a false move, right? False moves are powerful in the other direction. So the head and shoulders, the head gave you the up thrust. You have the third move here, the third thrust rather. 1, 2, 3 thrusts. So you have the head and shoulders. So with the head and shoulders, let's pull it up for you so you can take a look at head and shoulders. So head and shoulders, where you have, now this is one with an ascending or a rising neckline or neck base line, right? So let's look at this as a head and shoulders. What happened? Okay. So where's the neckline? There's a lot of ways to draw this. You could draw it the way I just showed you, right? With that rising neck base line. Sorry about that. And maybe you put it like that. Okay, so based on that theory, the price would come down, then it comes back and it would retest it, and that's called the pullback. We talked about throwbacks. Pullback is the opposite of that, where you have a resistance. Sorry about that. You have a support that breaks through, and you come back and retest it. That is a pullback, the opposite of a throwback. So in this case, the breakdown, sideways, come back, reject. With diag, it's a little bit choppy here to just look at it on a diagonal. You have just those two contact points. Let's clear that up. Just those two contact points. I would look at it more like this, where you have generally right about here, where you have kind of the bottom, the support, bounce, support, like kind of this is I think this is more or less the neck base. You could draw it lower, you could draw it here, but the point is you have a pretty good, and I talked about this on Twitter, on one of my tweets, where you have the head and shoulders breaking down, right? When it completes, it doesn't complete until it breaks below the neck base. To do that, you take the height, right, from the head to the neck base, you extend it from the breakdown, and it gets you basically down into this rectangle. So the head and shoulders happened with the moving average cross, with the close below the MA50, right? Those are all the signs. How did we know? Well, there were signs, right? I've walked you through them. There were also sentiment signs. We want to talk about sentiment. I'm going to talk about it with this most recent top. But back here, I put out tweets other people observed. It was just too much excitement. I put out a tweet that literally said, too much excitement. And that was, I don't know, maybe here, April 11th. I don't know if I was good enough to put it up here in this top. It was just in this area because everything was running. Too much enthusiasm. Sentiment was too hot. that suggests there's a top, right? You want to think about sentiment. I talk about that in probably a bunch of these chapters in my book. Price broke down. So we talked about the MA50. What do we have here? Now we have the first close above the MA50. To get there, we had some stuff going on in this rectangle. I'll talk about that. But here in July 25th was that first close below the MA50, right? This is the first close above the MA50. And that suggested weakening bear force, right? That was kind of the red light turning yellow. And really, it was not until the price was able to recapture this 200 period moving average that it became bullish. Because we can see where the price was rejecting here early in May, rejecting again in June, consolidating at that level, and then eventually continued on its run. But this is when we switched from bearish to neutral, and then really bullish up here. But that's a little bit semantics. If you want to wait, that's a kind of a longer term swing type of position where you're really only going to play it above the 200. It's fine if you want to do it that way to minimize your risk. But there were signs of bullishness down here, right? There was a low time frame ascending triangle I tweeted about. I think right here, the 21/22nd. And then we had good old EMA 8. So what did I observe, right? I observed that we had 3 closes above the EMA 8. You had that here, but it was 2 green and a red. You have a spinning top. The spinning top forms also what's called a bearish harami, where the candle body is inside the prior candle body. That was which is a bearish reversal. 2 candle short-term bearish reversal setup, also happening at the upper Bollinger Band. So you had this that was a pretty clear profit-taking signal. And it was also happening right here at where the price had been rejected before, pretty well-established resistance. So, at this point, now we've got middle to end of June, we've got a well-established upper resistance area. We have a pretty well-established support area right down here around 30, 31K. So you have a rectangle. We were sideways in the rectangle. And so we had initially the price, the floor of that initial bounce was May 19th. That low was 30K roughly. It respected that. It respected the price where we have a morning star on the 7th, 8th, and 9th. Let's see, morning star. We had a morning star, 7th, 8th, and 9th. 3 candle reversal and a bounce. And then we had all these candlestick signals at the lower Bollinger Band, bullish signal, upper Bollinger Band, bearish. You see what I mean? Price bounced back down, and you're looking to find support here. What was interesting is that on this day, the 22nd of June, it temporarily broke that initial low. That initial low from that, kind of full, that not crash, but that major volatility, price action that pushed us all the way down to 30K. It temporarily broke below, but came back above. I talked about that concept earlier, failed signals. So that's the key support. Boom, 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 key support. Boom, boom, comes back below. Uh-oh, you violated the support. People are taking a short position, but then all of a sudden, boom, it bounces. You see that. That's the bull trap. You see that a lot on like a double bottom setup where you have an initial low, okay, the trough. It bounces to the peak. It comes back and then goes just below. It's a stop loss sweep. A lot of people who bought in on the initial low and held, they made their stop loss right at that first low. So when you get that, boom, right below it, stop loss sweep, and it goes. So you pay attention to failed signals. And we saw that here on the temporary violation of that low, 30K. That's called the spring. It's the opposite of an upthrust, right? So here's the spring. Here's the upthrust, right? Do you see it, right? Temporarily there, right? Came back below, upthrust, spring. You see it, right? So that happened. That was like, all right, let's pay attention to that. But that also, the spring, the whole bull, I use the word thesis. It's really, if your friend is skeptical, can you explain to them why it's bullish? Can you explain to them why it's bearish? Where do you think it's going? So that was your spring. That was your temporary bear break. came back above, bullish, powerful bullish signal, but then the price was rejected here, MA50. So at this point, we were already watching the orange line. Why? It had been a critical price level on this chart, and we had that first close below, signifying bull weakening. So we're looking for the first close above to signify bear weakening. All right, so you see how we got here. You see my moving averages. There's one more thing I'm just remembering I want to point out on the top, and that will help me talk about this most recent top we had. So we were watching for the close above the orange line. It couldn't get there. It couldn't even get to the yellow line. See the EMA 34? Rejected there, rejected, rejected, rejected. So here we have July 24th, first close above the EMA 34. That's notable. You can even go long on that. Why? Because that's a viable thesis. If your trade plan, if your argument to the judge or the lawyer is that the price is reversing now because we have broken the 34 and we're going to hold the 34, that means that's where your stop loss would be, right at the EMA 34. So if you lost it, the 34, you close the trade. So it was a viable position to go long. Same is true here on the MA50. Whether you went on just the initial break with just the initial intraday candle or on the candle close, that would be on your trading style, right? People often ask, how do you confirm it? Well, confirmation is actually your choice. Is it a percentage move? Is it a candle wick? Is it one close? Is it two close? That's your choice, actually. So I tend to kind of use a candle body, but if I'm looking to structure a trade, I might enter intraday and I would just manage my position. I'd say if it goes below that, I'm out. So we had that sign of bear weakening where we had 1, 2, 3 closes, a 1, 2, 3. We had 3 closes above and twice in a row, July 22nd, 23rd, where the price found support on the 8 EMA. Then we had the close above 34. Then we had the close above 50 and the moving average cross EMA 834. So that was okay. But, that's in the context of, we're at the bottom of the rectangle. We're probably going to bounce up here anyway. We've done it several times. So yes, you pay attention to that. But this bounce came with the moving average crosses. At that point, we had a pretty well-defined resistance. Horizontal level, you see right there. We had all these fake outs here. So we had the break up above the top of the rectangle, came back below, and it bounced back out of that. So really, you can define the rectangle right here at 41, 42K, but it's also in the context of this key horizontal. We've often talked about horizontal levels. So we have the initial all-time high from January. It's at 42K. The price came and broke through. That was a long signal. Again, when you break a resistance, you can initiate a trade on that but that's your stop loss. That's your thesis. Made a new high, came back and found support. I talked about that confluence. Remember that about the MA50 and this high? That's still a level you pay attention to. So it flushed back below it. We're going to extend that over. Maybe we'll just do it that way, and we'll get rid of this. We'll keep it simple. That's what I like to do. So let's keep it simple. The height, the resistance, the support, head and shoulders, came back below, briefly consolidated, came back below, rejected. Rejected, right? So we were rejected at a logical level. We didn't really break the height of the rectangle. This was a logical level, right? Because that's also a pullback. What do I mean by that? In this case, we made the high, we came back, we broke through it. We did that. We did our head and shoulders, came back, and then boom, we just, we kept doing that. So that's exactly what's going on here. And then the price was able to break through it. I skipped a step, though. There was one more really important sign of bear weakening that we observed on the daily chart. We have the on-balance volume, which is a momentum indicator. You can also think of it as an index in that it adds up the buy and the sell volume, and it's based on the candle close. That's what we do when we draw our divergences. So for an example, here's a pretty easy visual to look at, right? Price making higher high, RSI in this example making lower highs. I don't like to use the RSI as much for regular divergence. What's regular divergence? There's something called continuation divergence as well. This is a little bit more complicated chart, but continuation divergence, hidden divergence rather, is a continuation divergence. So in this case, I like to use RSI for hidden divergence. Let's say the price is going up, but the RSI is putting in lower lows. What that means is as the price is moving up, you're actually retaining your price gains and the RSI is cooling off. The RSI is the relative strength index. It measures against itself. It's not against all of crypto, right? It's just a measurement against its own strength or weakness. And it's a bounded oscillator, bounded. That's why I don't use it for regular. What does that mean? It has an absolute limit. It can't go above 100. It can't go below 0. It has a fixed limit. The on-balance volume doesn't. That's why I like to use it for regular or reversal divergence. And in this situation, we had 1, 2, 3. You see these peaks? 1, 2. That's a lower high. That's a lower high. What does that correspond to? High, high, and there. So you had what's called double negative divergence. Let's pull up that example again. So not just, one high, but let's say that the price made another high and another lower high here. It'd be double negative. We saw that with the on-balance volume. I really pay attention to that. There's an article going around on Twitter. It's a free article. I've talked about this subject. I also have some chapter in my book, chapter lesson 38. All divergences are not equal. I talk about that. So that was a warning sign. So you had the regular bearish divergence with this new high. It's an unconfirmed high. The on-balance volume needs to confirm a new high. It didn't happen. You had the double negative divergence. Right, you had the up thrust, you have the head and shoulders forming, you have the moving average cross, and you had the MA50 close, right? So a lot of people got caught off guard here, and they shouldn't have, frankly, to put it bluntly. And people very easily get caught up with their enthusiasm. I maintain that nobody should have been caught off guard here. Now, I understand, I was a little bit in the minority for a while because a lot of people were talking about 50 to 60K will be quicker than 40 to 50, and you put out that everyone's going to love you when you say stuff like that. But there were signs of weakening. What did we see? So I tweeted out a bunch of them. I have the thread here. I can get to them in a minute. But we're setting the table. We're setting the table for this. Okay. We talked about all this, right? We talked about all that, and we talked about the neck baseline somewhere in here. Okay. And we talked about the rectangle, all right? And let's just do it that way. We kind of have the height of the rectangle and kind of the bottom of the rectangle. We'll just note on this flash dip after the top, look where it found support, right? Look where it found support. Nobody should be surprised either where it found support. And it's interesting. I try not to watch other people's analysis, honestly, because it kind of throws me off. A lot of this is just experience and gut and muscle memory. So, for me, this is a level that couldn't be ignored. And a lot of people would talk about 38K, but how can you look at that until you've seen how the price tests this key level? This is just such an important level. It's there. But how do we know that it was weakening? How do we know? So we have the head and shoulders. We were on watch for a pullback or a bearish retest of this breakdown. We're on watch for that. So that's fair. But why? Well, weekly chart was just nuts. Weekly chart 1, 2, 3, 4, 5, 6, 7. Did it do higher highs? So 1, 2, 3, 6 weeks of higher highs and higher lows. All right. But leading up into that, we had these 5 green weeks in a row, and then we had this spinning top. A spinning top, any candlestick signal is about context. I mentioned that before, right? I said that before. Any is about context. But this spinning top came after 5 green weeks. So it makes it a little bit more bearish. But in truth, a spinning top, a doji, those are caution, not reversal. They're kind of indecision and caution candles. We saw that here. So, yes, we did push to a new high, but should have started to be cautious after that candle. Slightly cautious, not like I'm not, not in a position where you're not going to take any risk, but you're going to be a little bit more careful. We observed also. What's the date? Let's go to here. See if let's check when we first, there we go. August 22nd. Noting first sign of bearish divergence with on balance volume daily chart, likely unactionable until we get another thrust, and double negative divergence. So what I had in mind was how we had the double negative divergence here, and I wanted that would have been such an easy short setup on the daily chart. So, but we didn't quite get it in the daily, but I'll show where we got it in the lower time frame. So what was going on here? We have the on balance volume putting in a lower high. Okay. August 22nd. My tweet was right there. August 22nd. And the price right there was like 49K at that point. So how did we get there? And again, we're calculating divergence based on the candle body close. So we had it right there at that point. So we had a higher high, but not confirmed by the on balance volume. That puts me immediately into a position of caution. And if you watch my Bitcoin live videos, feel free to check that out check that out if you like what I'm doing, and you want to take this seriously. I talk a lot about that on balance volume. How when I see the regular divergence with the on balance volume, now I'm really paying attention. And so I started to kind of pay attention. And what I observed, let's clean it all up. So as I said, we were expecting, to stall out somewhere with the head and shoulders. But what did I observe? Let's talk about price moving average interaction. We had talked about that 20-period moving average. So after this moving average crossed, the 8 crossing the 20, the 8 crossing the 34, crossing the 50, price bounced, a little bit overextended above the Bollinger Bands. That reminds me, I haven't explained the Bollinger Bands. But we got above the Bollinger Bands and came back, and it found support near that MA20. Bounced again, a little bit overextended. It touched it. All right, so we're saying, all right, I see you. Now we get divergence, August 22nd. I'm on watch. I'm looking here, kind of a tower top. Didn't really complete, but it pulled back, and now we had a double dip below the 20, but we found support at a really nice logical level, MA200, trying to flip it into support. We say, okay, now it's support. It's now it's support. But we had kind of the first really penetration of that moving average. It bounced again, and now, boom, August 30th, first close below the MA20. So that's just, that's just a sign of weakening. It doesn't mean it's bearish, but it's when I said at the beginning of the video, and by the way, please hit like, please hit subscribe, and thank you for watching. Your job is to identify the trend and ride it, but also to be on watch for signs of weakening. Pivot points or levels that would kind of reflect that price weakening. And I think, so we started to see that with the MA20. So that was a sign. How do we know top was coming? Right? Proximities for the head and shoulders. Now MA20, that's a sign, a signal. What else? What else did we see was kind of a sign of weakening trend? We talked about the weekly chart. We talked about that spinning top that week, suggestive of, because look, the price needs to consolidate, right? This is just an unbelievable mega monster move from, 8K or even, March lows, 3K to 64K. I mean, it's ridiculous. And that has to digest every move. It's not just going to go up. I know Sol has been ridiculous. There's a bunch of ones that have been just ridiculous. But even those will have to consolidate, and it comes on larger time frames. Here we have our high, our low. So we have the high and the low. We're on watch for, what did I talk about earlier? The equilibrium. We're on watch for a higher low at some point. I'm sorry, a lower high at some point. Now as the price comes down, we're looking for our, higher low. So it needs to consolidate. Let me do it a little bit more simply. Comes up. Here's the low, higher low, lower high, higher low. Boom! It's a tightening range. It's contraction. It's compression, and then you kind of play the break. Okay, it just needs to happen. Nothing goes straight up. You stair step. You come up, you come back. You find support there. You bounce. Now you come up. You find support there. Now you come up. You find support there. You stair step. You have to do it. You need to digest. All right. So we were on watch for a lower high, just based on the candles, just based on the moving averages, but also based on sentiment. All right. I talked about sentiment up here. I tweeted out too much enthusiasm. Here, I just noted like, wow, you guys are way too enthusiastic. So let's see. Almost to the point. There you go. September 2nd. right? Where are we at? September 2nd. You know, we're right in that same area. Now we're around like 49K roughly. And I'm a bear. Everyone's calling me a bear. Oh, Cheds, you've been a bear since 20K, which was not true. I flipped neutral on the MA50. I was bullish above 200, but I pointed out all the bullish signs along the way. You know, if I'm bearish, it's because the chart's bearish. It's not me, okay? But I observed here, September 2nd, too much enthusiasm. So you get, you know, sentiment is often almost as good as the chart. So I tweeted out here, almost to the point of pushing me to be bearish. Always pay attention to sentiment, right? You know, you see me talking about that. So the sentiment was a sign, right? What else was going on? Here we go. And then this is 3 days later. It just kept going. And I said to play contrarian, the way ultra trading right now. Now this is interesting. I'll talk about this. The way ultra trading right now could suggest we are near a short-term top, right? What does that mean? So in all of these tops here in 17, I'm not necessarily trying to compare this top to 17, but when Bitcoin hits a short-term top, when Bitcoin is ready to cool off, it cools off a little bit, then Ethereum goes nuts, right? So like, and then after Ethereum cools off, it's Litecoin's turn. So, you know, I saw Litecoin setting up. I tweeted it out. You saw my tweet, the 183 go signal right here. So that was right here, September 3rd. Let's see. No, that was right here, September 2nd. So the price had hit these tops. It was coming back, and the whole market was kind of bullish. You could feel it. So what you're doing is you've identified this lower high in this consolidation structure, in this consolidation cluster. So as the price is bouncing, and you can see a little, 3 days of green volume, at least two leading into right here where the price is challenging that high. It broke through it, consolidated a little bit, and just went. So you had, it was setting up. Litecoin was setting up, and by that point, what had Ethereum done at that point? Ethereum had already kind of bounced and was, so it was like, now it's time for Litecoin. So you get that flow. You get that flow where Ethereum goes and then Litecoin goes. And that's telling you, hey, we're probably nearing the end of this move, of this push. So to play contrarian, the way ultra trading, right? And not only that, like TRX was above 10 cents. I don't know where it's at now, but like, I mean, I'm looking at a lot of these. I'm like, man, everything is just pushing. That's because money flow has come out of Bitcoin at that point, and now it's flowing around to the other, projects or whatever. So that was a sign. That was a sign of weakening of this trend. Okay. Again, people say, well, there's no way to see it coming. It's completely false, and we know that because we are looking at the signs right now. We're studying it. We're observing. We're learning it. We learned all those signs from this top, and we started to apply those lessons to this top. What else? And tested an MA20 area again. This is August 30th. So really, I tried to highlight that, and that's what I do in my Twitter feed at Big Cheds. I make what I think of as academic observations. I'm not really trying to tell you anything. What date was that again? That was the 30th. That was right here. So I tweeted, I'm like, hey, pay attention, right? I'm telling you, when you see my tweets, pay attention. I'm pointing something out. We're testing the area again, and then we closed below it later that day. So that really, I was saying, hey, pay attention to this. But I'm trying to teach you how to fish. I don't want to feed you the fish. So a lot of what I do is I'm trying to lead you somewhere. I want to empower you. That's why I wrote this book. That's why I do what I do on Twitter. That's why I do on Bitcoin Live. Like, I don't want to just hand you stuff. I'm not going to tell you the targets. I'm not going to tell you any of that stuff, but I'm going to teach you. I'm going to kind of empower you, right? So that's kind of what I'm looking to do. So that was that sign. So we have that MA20 weakening. So I had talked earlier about the bearish divergence. I'd been on watch for it. And it started to resolve a little bit where we made this new high, and now kind of it's starting to resolve itself. We have a kind of a flat high. So what do I mean by that? At this point, we have what's called a mild divergence. Basically have the same high at the point in time where we had still at a higher high. At this point in time, we still had a higher high in the, do I have that chart again? Do I have that chart again? I want to find it, but I'm having trouble. It's the bearish divergence chart. Here we go. It's a mild a mild divergence where, let's see, mild bearish divergence where the oscillator, weak, weak divergence. It wasn't that strong, right? Where it was an equal high, versus a lower high, versus this example here, strong, a little bit weak. It had started to resolve itself. But if you looked on lower time frames, and when do you use a low time frame? So you got to keep in mind the longer the longer the time frame, the stronger the signal. And in this would be a good opportunity for me to discuss the Bollinger Bands as well. The longer the time frame, the stronger the signal. When you're at a key level in the chart is when you switch to lower time frames. That's when you look at that a little bit more microscopic. You want to think about yourself like a scientist. You can move around to multiple time frames like a scientist. It's like changing the magnification on a microscope, but it's at the right point, right? You don't want to just switch to the 1 hour because it looks the way you want it to, and you're really trying to see a bounce. A lot of people asked me, I put out this tweet, I think right after the bottom, I said, nobody knows if it's bottom yet. Literally nobody knows. And there are people right now who are probably telling you bottom's in. They have no idea. They literally have, I don't know, because the price hasn't told us anything yet. We don't know that. We're still consolidating. You can see it. All right. But we had a pretty good warning sign here on the 4-hour chart. We had a double negative divergence on the 4-hour. That's a pretty good time frame if you're going to try to structure a trade. 1 hour, a little bit more risky, but that 4-hour, we were on watch for a high at this point because we had all those prior signs of weakening. And here we have, so you made a new high, you go look, it's unconfirmed high. All right. So you have the double negative divergence on the 4-hour. What happened? Whoops. So we had the big drop, right? So here's the big drop. So look what's happening. So when the price goes sideways, here's the Bollinger Bands. And when the price goes sideways for a while, they get tighter. When it makes a big move, they get bigger. So you see here, they're expanding off that big move. Now we've been sideways on this 4-hour for a number of candles, for 27, 28 candles so far. Bollinger Bands are getting tighter, and we have what's called a Bollinger Squeeze or Bollinger Pinch happening here. And they don't stay this tight for long. So this is starting to get tight. It can get a little bit tighter, but we should be on the watch. Now we should be on watch for a type of move. Like back here, everyone wants to jump in. You need more time. What do we see on this 4-hour chart, right? We see that the price still cannot break up or close below the 4-hour MA200. Historically, that's been an important price area for Bitcoin. It came back up here, briefly back below, rejected, boom, 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 above it. So we've been above it since that 33K break, really since that bottom on the daily chart. So the first thing for this to continue, it needs to close above the MA200. So we'll watch that short term, and even here, the MA20. So the Bollinger Bands are these two bands, and then we have the brown line, which is a 20-period simple moving average. I talked about the orange is the 50. It's the MA20, right? So that's my setup. And I use the Bollinger Bands for reversal signals. We talked about that. I use them to add context to my candlestick signals. And I talked about that on the daily chart. When I was right here, we had this kind of morning star, and then we have the tweezer or near tweezer top here, the bearish harami, right? Bear signal at the upper Bollinger Band, bull signal at the bottom. That's how you want to play candlesticks. But where are we at? I've said a lot. I've given you, but what have I told you? I've given you tools to monitor going forward. I don't know for the bottoms in. Nobody knows, okay? And I'm gonna switch to chart requests and chat room requests here shortly. But I think we're okay as long, for me, the bottom line is this key support and resistance flip level, the high of January, low of February, the height of the rectangle, and the low of this bounce. As long as we're above that, I think bulls have a pretty good chance to do this on a longer time frame where we have the high, the low, lower high, and higher low somewhere in here, right in there. That would be ideal. Tightening range. Maybe we go sideways till, November, and then boom. That'd be kind of ideal. It would make sense, but you have to hold this area. Lower time frames, we see the price is still vulnerable on lower time frames. until it breaks up, closes above the MA200. It's incredibly vulnerable. We seem to be retesting the range lows, and you've got, you know, more or less a rectangle going on. It almost kind of looks like what we had happening on the daily chart. So you can use those same principles. Watch for the first close above the 4-hour 50, above the MA200, above the EMA 34. Watch for that. Look for the signals the price gives us. If we get a flash crash and a retest of these range lows here, you want to buy. You want to buy the dip here until proven otherwise. Especially if we get this scenario. I don't know if it's going to happen, but if we come here and temporarily break this low, 42,830. So pay attention to this. If we break this low, but come back and recapture it, you go long. You go long in that signal, and that's where your stop loss is, right at that level. So that's a pretty simple way to put it. Wow, that was a lot. I got a lot done. That's where we're at. I probably, missed a couple things I wanted to talk about. I'll just do a quick reset here. I want to say thank you for watching. Please do hit like and subscribe. You can find me on Twitter. I'm at Big Cheds. I do a lot of, those observational tweets. I don't do these videos. I'm on YouTube at Cheds Trading. I don't do these educational videos often. People always say, that was great, Cheds. Thank you. That was great. Can you do it more often? I am a founding analyst at Bitcoin Live, the best-in-class educational platform for crypto. We have a great team. Peter Brandt, Bob Lucas, Dean, Axel, and Mark. I mean, it's just like a really solid, just a great team, a really great team. I'm proud to be part of it. I do twice a week, long form updates, and it doesn't matter if I'm on vacation, I do it. I get it done. Check that out if you're interested. That's why I can't do these often. So this would be number 2. It's in this playlist on my YouTube channel under educational live streams. Many of you know me from Crypto Banter, where I was a guest, and I started my new weekly show Thursdays at 5 o'clock. Subscribe to them, and definitely check out my show Thursdays, 5 p.m. Eastern. The show is called Trading Wisdoms, more or less based on my book. It's done really well. It's available on Amazon, Trading Wisdom. Check the reviews. People are enjoying it. I'm super appreciative of that. Also, I'm a cancer survivor. I fought lymphoma. I wrote about my experience. If you know someone who needs this book, wants the book, just tell me, and I'll get you the book. So let's get into the chat room. Let's see if I can answer some of your questions. Let's see what's going on. That was a lot. I don't know how long I've been going for, but that was awesome. Let's check out the chat room. I'm going to scroll up a little bit. I definitely want to say thank you again to everybody. Let's see. I got a bunch of comments. I'll have to review those later. Let's see here. So how about this? Anybody have any chart requests? Why don't you go ahead and give them to me? I'll try to do some of them. I'll see how much energy I have left. I look like I just gave you a full hour, so I'm surprised I'm still going. Chart ADA. Someone asked about ADA. Let's talk about ADA, and let's talk about, signals, reverse, failed signals. So here we have a failed head and shoulders. We have the height. Maybe this is better expressed. This is better expressed on the daily chart, where you have the initial thrust. There's your head and your shoulder, roughly in this area. So in this situation, people were looking at the neck baseline or the bottom of that move. But what's interesting is, so what happened was this head and shoulders failed. Price broke up above the right shoulder, and your long signal was at 150. Right here, some people went long on 140. Here's your lower high. Some people went long in that break. Here's 150. This is when I had people. I was talking about the Bitcoin Live, people going long there. But Bitcoin Live members and a lot of people, we had already been in because we were buying the dip at this level. You want to pay attention when the price really gives you really a clear level. So we had many opportunities to buy at $1. Think about the concept of a low ball bid. In a strong uptrend, you want to have a really low bid that you probably won't fill, but if it does, because crypto's volatile, we never know what's going to flush. But if it does, you have a nice entry. So even when the price is at 140, you have your low ball bid at $1.98, 102, right around there. It rewarded you. Even back up here, look at that. We went from 220 to $1. I mean, so forget about it. Low ball bids paid off. Key horizontal structure. You had in this case also really in the daily chart, you have the height of the bounce where the bounce is rejected constantly. come back up, found a little support, came below, rejected. So now you're looking, that's your long signal. We have the failed head and shoulders, and it just, boom, it just went. We're seeing what's called relative strength here. All right, it's relative strength to Bitcoin. Bitcoin hasn't done this. All right, Bitcoin, here you've cleared several lower highs on ADA, where you had this inside bar. What's an inside bar? Is when a candle is completely within the prior candle. That is a sign of slowing momentum. Sometimes you get a double inside bar, and then you kind of either go long on the break of that inside candle and your stop loss is at the bottom of that, or you go short on the break of that inside bar and your stop loss is the top of it. So you had a sign of weakening bear momentum here, a little bit more indecision, sideways chop, and boom, relative strength today with the price clearing these lower highs. You know, are we going to come back and challenge this top? I don't quite know. I think really a lot will depend on what Bitcoin does. But if I were to look at this chart just kind of in a vacuum, I would be looking to buy the dip at, I would be looking to buy the dip first of all, but I'm looking to buy the dip there at the MA50 and quite possibly these most recent lows. So I'd probably have my first trade structured here, and I'd probably have my next trade structured around the MA50. Maybe I kind of play off of that level as well. So it probably needs to consolidate. We see a rejection at the MA20. So that's something to watch out for, right? What does that do? It gives you another level upon which you can structure a trade. You say, okay, the price was initially rejected there. You know, if we can break back up above that, right? You go long there, and that's your stop loss. So, you know, it gives you that as a possible way. Let's see, Matic. Hey, Paul Garrett, what's up, buddy? How are you? Let's take a look at Matic. I have a bunch of zones already lined up from all my coverage. And really what you can see here, maybe we'll clean it up because I like to do that too. So if you have too many lines, that's not what I'm trying to do. If you have too many lines, you want to often clean it up, redraw it. And what do we see first? You take the most obvious is where we have the well-established supply or resistance. You have kind of this V bottom type action. You have the top of that V bottom, right? There's your resistance. So you see as the price broke through, there's your low ball bid, boom, 116, it hit. So I would just kind of look at this chart now in this context. It's still bullish because we have a price trading above the 200 period moving average. If you have a rising 200 moving average, that's bullish. And if you have the price trading above it, that's a confirmation of that being an uptrend. So we still have an uptrend. The price is consolidating. However, you see those two key horizontal levels that you will want to observe. If you're a little bit more, you want to try to jump the gun and get in, you definitely want to see this MA50 hold, and you want to see these lows hold as well, that August 19th, August 31st lows. Let's take a look at Solana chart. That was requested as well. I talked about relative strength. Look at this thing. I mean, forget about it. But what do? You buy the dip. And how do you know where to buy the dip? Well, EMA 8, green line, boom. You can either have EMA 8 proximity where it's close to it here. You can kind of jump in here where it's close, but now it went below. What do? Well, if you jumped in here and it failed, could have cut your trade, but then when it came back up and recaptured it, you go long. You see my point? You see what I'm trying to say? So 8 EMA, that's your buy the dip spot. 2 red candles in a row, but not overwhelming volume on them. You always want to observe the volume on the green versus the red candles. You still really have the price in a primary uptrend between the upper Bollinger and the EMA 8. I would say you just continue to buy the EMA 8 on Solana. So let's see. Luna was requested by Michelle. Let's see Luna here. What are we doing? Luna was really strong as well. Luna's at $40. This one had been one of the stronger ones, had relative strength to the market. I think within the first few months of the year, I think Luna was like a top 3 or top 4 performer. You had the price breaking down, and if you'll observe the volume, the dip buying, there's volume behind it. That kept this on-balance volume kind of strong. So I had been talking about in my coverage that I had a little bit more confidence in Luna than the other alts. So how do you play it? Well, you have the price, you have the red light turning orange, you have the red light, boom, and now kind of going sideways, red light turning orange, right? Not green yet. and we're observing. That's what we do. We're observing price moving average interaction, price with the MA200, the price rejection. 1, 2, 3 rejections. So now here, fake out candle, but boom, close above and then follow through. So that was your go signal here, both clearing the lower high from the 11th and the MA200. You've had a continuation of that ever since. We will also talk about, we observe the EMA8. Look at that. EMA8, EMA8, gorgeous. Boom. Then the first sign of a little bit of weakening continued nicely, churned, came down. But it's so bullish that it didn't even touch the MA50, right? That orange line. Didn't even touch the MA200. Big day today. Is it going to continue to go up? I don't know. Nobody really knows. You'd say probably, because you probably do some kind of a tightening range and continue. At this point, what you would want to do is observe a horizontal. I'd probably draw that right there. We will kind of note the rejection and then the support. You can play that. You can play EMA8. Still quite a bullish chart. Let's see, DOT was requested. We'll do a few more requests. I like to do these. I like to, hopefully it helps you folks out, and it's fun for me for practice. Let's see. So on DOT had been lagging a little bit, but really took off. So we have DOT for quite a while. I think some of the other alts in Bitcoin broke out, but this price was still below the 200, and then it was initially rejected right there, August 21st, rejected similarly to where it was rejected in the June 3rd high. Came back below MA20, broke back up above, so there was some continuation of that move. It's bullish right now, and you have relative strength to Bitcoin. Look at that on-balance volume is strong. You have relative strength to Bitcoin because Bitcoin hasn't been able to break these lower highs. I would assume if I were to go to, say, a 4-hour, look at that, boom, the 4-hour, DOT is using this as support, the 4-hour 200. That's relative strength. Back up above it, support. What's Bitcoin doing? What is Bitcoin doing? 4-hour below it, right? So you can see how Bitcoin's weaker in its resistance, right? That's relative strength. What does that mean? Well, if you were to pick between the two, you probably would go with DOT right now because you want to play relative strength. Let's see. Appreciate the feedback, Dave. Appreciate the feedback from everyone else. Ergeme, Link or FTM? Let's take a look at Link. What is Link doing? So the Bollingers are getting tight here on the 4-hour. We'll switch to the daily chart. We see this level I had marked 30. That was a price rejection. Broke up above and then here rejected again. It's kind of in between here where it's above the 50 but below the 200. A little, I'd say a little bit similar to Bitcoin. Let's take a look at the 4-hour 200, kind of right at it and now just below it. So it's not quite as strong as DOT. I'd say it's slightly stronger than Bitcoin. What do we think? Overall, not too bad. I think if the market does continue, I think you'll be fine. I think this one will probably continue. But it really ideally would, be above 26 and really above the MA200. So this has a little bit of work to do. I would say somewhere more in the middle, but I would give it still a slight bullish lean. All right, let's keep doing these requests. Hit that like, hit that subscribe button, please, if you enjoy what I do. Appreciate that. Appreciate you watching. I appreciate you following me on Twitter and subscribing on YouTube. Algo, whoa, look at that. So we got volume. We like to see that. We like to see volume on this move because this move is in the context of this rectangle. Volume on the break of this resistance right around 170. So first and foremost, you absolutely would want to extend that level across because we want to stair step. I talked about it earlier. Boom, 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 boom. Come through, boom. You want to hold here, right? That's what we're trying to do. You want to stair step. So we'll watch that. We're also going to buy the EMA8 if it gets there. I like the volume. It's bullish, breaking out, but it needs to consolidate. And we're seeing now with 2 hours to go in the candle close, we're seeing a one inside bar, not two, just the one. It's just consolidating. It needs a little more time. So that's your buy the dip level 170. Below that, you would have essentially a failed breakout below these highs, below the February and below the April high. That would be a failed breakout. Let's see. Famous firm asked me a question. Do you sell everything when you see the signs or just your trading portfolio? So I have my hodl, which I never sell. I only accumulate. And then when I see short-term signs, what I'm probably going to do is move my stop loss up on any kind of trades I have in play. I'll move my stop loss up so I can lock in more profit. I may even start to be on the lookout to initiate a short position if I see what I want to see, as I talked about earlier, a potential unconfirmed, double high or a negative divergence. So I'm very confident in my trading. I could be more confident like anyone else. I still make a ton of mistakes, but I enjoy that because I can learn from them. I'm always studying. I'm studying CM2 T2 right now. I don't know if I mentioned earlier, but I am CMT level 1 chartered market technician. So I'm interested in this stuff. I'm studying it. I studied candlesticks, classical charting. But to answer your question, my hodl's my hodl. I don't sell no matter what. All right. Let's see a couple more requests. XTZ was requested. We'll do XTZ. XTZ. I know that one's been popular. I've actually seen it on Twitter a lot recently, so a lot of people are playing it. What's going on, XTZ? We have a pretty clear break here, so we would really just pay attention to MA 200, right? And the tweezer bottom. We have the tweezer bottom. We talked about tweezers before. Tweezer bottom. Let's move that out. We see the tweezer bottom, right? Tweezer bottom. MA 50 and MA 200 area. It bounced. It broke this recent high. Now we have a little bit of a profit taking, right? On these two candles, those upper shadows, a little bit of profit taking, which is okay though. When you make that big a move, pretty big move, that's a 50% move, I think. What is that? 70. My math is off today. It's 76% move. You're going to need to consolidate. So now we have a high. Probably going to pull back and look for support somewhere, in this general area. It's a bullish chart. It needs to consolidate. You have a pretty clear low, pardon me, having a little trouble there. Pretty clear lower high in relation to this high. So, it's just a longer term. The high, the low, the lower high. Where are we going to get the higher low? It's still consolidating, but it is bullish. That would be my estimation. Let's do a couple more, and then I'm going to wrap it up. It's been quite a long live stream. Atom ATOM USD. Let's take a look at that. All right, so it's been quite bullish. See that key horizontal level right around $17. Let's just clean it up a little bit. So we've got MA200, the blue line. See how it found support there twice. And after Bitcoin broke down, we're seeing it bounce and actually made a new high. So we'll go ahead and observe that horizontal structure where the price is rejected. Now it's broken through it. We want to see it turned into support. This is all essentially in relation to, or in the context of these highs right here. These highs right here. So there's history, price history in this area, which actually makes it a little bit harder to break through. It may need to go sideways for a while and churn, but you can really just look at it that way, where you've got a clear level that is broken. You can go long for sure. If you're above 32, you can definitely go long. And this one, if you're not already long, you could long another test at the MA200. You could long the rising 50. Whatever it is that your position is, you're long. That's your thesis. And when the thesis fails, when the trade idea fails, that's when you get out. So I really want to say thank you. I don't do these very often, these live streams, but this is number 2 educational live streams. It's from my YouTube channel, Cheds Trading. You probably know me from Twitter. I'm on there at Big Cheds. That's where I'm very active on Twitter. I enjoy engaging with you. But I don't do these live streams that often because, like I said, I'm a founding analyst at Bitcoin Live. I tend to, I'd like to save my analysis for Bitcoin Live. And twice a week, long form updates. What's today, Saturday? I'm going to do another one tomorrow. The Sunday night update will be tomorrow. And I do a midweek update. I'm very proud of my involvement with them. You can check out the link or ask me more about that later. I also, on Twitter, you can see I do, there's a lot of times where they'll tweet out little clips. So you can see like what it's all about, right? You can see little clips of what I'm doing, what my premium analysis is. So definitely check that out. A lot of what I do is also based on my book, Trading Wisdom. It's done extremely well. Thank you to everyone for that. It's, you know, you can think about it as one third trading psychology, one-third risk management, and one-third technical analysis. Some people can't get the book, so I've been doing a free version on my YouTube channel. I have 5, you know, every 3 weeks, 4 weeks. I've been traveling a little bit. So lesson 6 will be tomorrow. I will do lesson 6, not tomorrow, on Monday or Tuesday, I will do lesson 6. So you can definitely look forward to that. I've started a new weekly show, YouTube show on Crypto Banter, Thursdays at 5 p.m. Eastern. So definitely do check that out as well. If you're interested in the book, I talked about it. It's on Amazon. I have another book. I'm a cancer survivor. If you know someone who's fighting cancer or has a loved one, I'll email you the book. I'm not trying to sell it. I want to give it away. So, you know, let me reach out to me. I'll get you my cancer memoir. You know, find me on Twitter, and I'll find a way to get it to you. So this has just been wonderful. I've really enjoyed doing this. I will try to do one again, you know, at some point soon. But like I said, I saved my analysis for Bitcoin Live. So I hope you've enjoyed this. I really thank you for watching, and you know, we'll talk again soon. All right, Big Cheds out.